stock market is concerned, it has fallen by as much as it does almost every 2 years. So whether we like it or not, every 2 year we see this mid cap and small cap index, they fall by some 20-25%, and Nifty fall by some 10-15% almost very regularly. But such a pullback, if it is short-lived, let's say for 6 months or 8 months, and then again the recovery starts, then it is not really should be seen as kind of a deep bear market.
Hi, my name is Sinoo Biswas, AVP and Cluster Head at AIF PMS Expert India. Being a core member of AIF and PMS Expert India, हम समय समय पे वेबिनार फंड मैनेजर्स के साथ अरेंज करते हैं, जहां हम अपने इन्वेस्टर एज वेल एज लोग जो मार्केट के बारे में नॉलेज गैदर करना चाहते हैं, जो जानना चाहते हैं व्हाट इज हैपनिंग इन द मार्केट, क्या हो रहा है मैक्रो एंड माइक्रो लेवल पे। इवन अगर हम लास्ट सितंबर से मार्केट में देख रहे हैं तो मार्केट में काफी करेक्शन देखा गया है, इंडियन मार्केट में काफी करेक्शन हुआ है, एफआईएस का आउटफ्लो हुआ है, ट्रम्प के आने के बाद मार्केट के सिचुएशन चेंजेस आया है। सो लोगों के बीच रूमर्स फैला है, थोड़ा पैनिक है कि क्या करना चाहिए इस कंडीशन में मार्केट में, हमें मार्केट में भी इन्वेस्टमेंट करना चाहिए या मार्केट से दूर होना चाहिए, हमें इक्विटी में करना चाहिए या हमें दूसरा प्रोडक्ट देखना चाहिए। तो आज सारे क्वेश्चन का आंसर करने के लिए हमारे साथ मिस्टर संजय सतपथी है। वैसे तो इन्हें इंट्रोडक्शन की जरूरत नहीं है, बट मैं क्विक ब्रीफ आइडिया इनके बारे में बताती हूँ, और सर प्लीज करेक्ट मी इफ आई एम रॉन्ग, और इफ यू वांट टू ऐड प्लीज ऐड। Mr. Sanjaya Satapathy, he is the founder and the fund manager of Ampersand AIF, and he has more than 16 years of experience in equity across multiple sectors. Even voted best mid-cap analyst and best stock picker by StarMind. His last job was he worked as a senior analyst in a Bank of America. He has done MBA, and last but not least, he has an experienced person. So whatever the query and whatever the question you have, you may ask after our session, and even I can also ask a question on behalf of my investors and people. Okay, sir, over to you. Thank you for attending the webinar. Yes.
Thanks Sinoo for this kind introduction. And yes, last couple of months has been very turbulent, and there are a lot of questions from all kind of investors. But as we know, like there is always a bull market somewhere. So some smart people have made money in gold, and some smart people invested in China or somewhere else. So there is always something or other going up. So it is not as if like it is entirely darkness for investors. But as far as we are concerned, our market is concerned, that stock market is concerned, it has fallen by as much as it does almost every 2 years. So whether we like it or not, every 2 year we see this mid cap and small cap index, they fall by some 20-25%, and Nifty fall by some 10-15% almost very regularly. But such a pullback, if it is short-lived, let's say for 6 months or 8 months, and then again the recovery starts, then it is not really should be seen as kind of a deep bear market. It is only when we had seen things like after the subprime crisis in 2008, where there was an extended period of poor run. That's something which at least is something which we are ruling out now, which is why we are saying that, okay, this kind of pullback should be seen as kind of an opportunity, because we have seen that whenever market falls around this kind of level, 20-25% in mid-cap index and Nifty by 12%, whenever you have invested post such correction, in next 3 years, your annual return, even from index, is about something like 15% annually. And of course, there will be alpha managers who will outperform indexes, and that the return should be better. But most important thing is that after this kind of a correction, the risk reward is favorable, and whosoever invests around following such a correction ends up being positive at least in the next 1 year, and a healthy double-digit return over a 3-year period of time. So that's something which we should keep in mind. The other thing that I must highlight here is that, after falling the last couple of days, our market is recovering. There are all kind of technical jargons which will be thrown for it. That is, short covering is going on, or market had fallen too much, and that is why it is kind of recovering. But there is definitely some fundamental changes also has happened, which has led to this recovery. So the fundamental change has happened because of RBI intervention. So what was happening is that there was a huge liquidity deficit, and that also was one of the key reasons, apart from the fact that the government spending had slowed down, which led to our economy slowing down, and hence earnings growth had slowed down. But in last 10-15 days, RBI has taken several liquidity expansion initiatives, including OMO and forex swap, and all those has kind of reversed the sentiment around overall money supply and equity overall. So as you know, like the rupee, which was depreciating quite dramatically almost every day, has also started recovering, and we are seeing rupee kind of stabilizing and improving, strengthening somewhat. And some of the recent macro data and high frequency numbers start also showing some positive changes. So one data which also worth highlighting, that the latest trade data macro, that is the export import data for India, turned positive in the month of February. Which is always a good thing. And similarly, the other data that is starting to improve, for example, this electricity consumption, these are high frequency data which we can measure quickly to know whether the economy is on the positive trajectory or slowing down. So that also is something which we saw some 6% kind of growth. Several automobile companies, we are seeing some amount of recovery, though it is not really out of woods. But some recovery is visible there. So overall, if you put all these things into account, that is RBI action in terms of liquidity injection, which will subsequently lead to interest rate cut, and inflation coming so much benign, that has raised the hope that there will be some significant interest rate cut in April. Then the other fact that our valuation froth has kind of come to an end, and there are several pockets of stock market where the valuation is appearing quite compelling. So all these factors put together, it looks like the worst is at least over. Of course, the global conditions continue to be fairly volatile because of the Trump tariff rhetorics, and also whatever is going on between USA, Europe, and US, Canada. Those things are something which will keep investors guessing as to what will happen. But this kind of uncertainty are not really great for investing, right? And forget about investing in stock market. Even for companies to expand their factory, let us say, whether they want to set their factory in USA or in Mexico or in Europe, those big decisions, because as you can see that even if, let us say, US decides to put those big tariff to promote domestic production, that is in USA, but his tenure is 4 years. Some of the big decisions they have to make, let's say, to put up a car factory in USA, the factory will start running only after 4 years. By the time Mr. Trump will not be there. So this decision will not be taken just like that. And uncertainty will mean that there will be delay in that. So which will cap overall global economic growth. But that in a way is a little bit of a good thing as far as India is concerned. Why? That's because we are not really doing anything silly, and we are staying neutral. We are trying to stay away from all this controversy. We are not really joining words saying that, okay, if you put tariff on us, we will put tariff on you. We are not saying such things. We are not really involved in any war. In fact, the only thing that we have done as a geopolitics is that we have called truce with China. And we're trying to kind of rebuild relation out there. So that in that way, India is again will kind of just like we had seen when this Ukraine war had started in 2022, and India had fallen quite a lot, and then subsequently people realized that okay, India's stance is the correct one. Probably something similar again will emerge in this trade war rhetorics. And if you look at some of the basic facts, that even if our growth is not something extraordinary like 8-10%, but at 6-6.5%, we are still the fastest growing economy by a distance compared to anybody else. And that itself is a big thing in such a dynamic global condition. So let us keep those things in mind. While we kind of at Ampersand, while we are cognizant about all these macro factors, but we are not really macro investors. So ours is a multi-cap fund. Even after this pullback, also our existence of near about 7.5 years, we have delivered post-tax return of somewhere around 20% plus, even after this pullback, which has come off, of course, from much higher level. And our approach has always been bottom-up stock picking, that is finding stocks on their own merit rather than just some kind of a big macro narrative. And we still see a great growth opportunity. As a fund, we are generally a growth investors. That is, our overall portfolio we built such a way that we should be able to deliver, our portfolio should be able to deliver 25% kind of earnings growth and have reasonable valuation, which is why we feel that because of that approach, we should be able to generate 20-25% kind of post-tax return for our investors over 3 to 5 year period, as we have done in the past. There will be periods when we will underperform. There will be periods when we will be found wanting in terms of our stock picking. But overall philosophy will always remain that we should invest in high quality, high growth stocks at reasonable valuations. And when we're talking about high quality, we're talking about those kind of companies which are setting the agenda of that sector. Even if either they will be the market leader or setting the agenda, in the sense that what new products will create excitement, how to grab market share, how to improve profitability of their own, and the competitors will look up to them as to what to do. So those are the kind of names that we will invariably pick, which is why, and while we are a multi-cap, like almost one third would be in large, mid, and small, we generally don't invest in micro caps. And in our portfolio overall 7.5 period, we have picked stocks at small cap level, which have gone all the way to become Nifty stocks as well as junior Nifty stocks. So that is what our strength is. We don't really want to get into completely speculative names and the only narrative. Like numbers mean a lot to us, and that is because of our background. Like say, I'm one of the partners, senior partner, the founder. All of us were from Merrill Lynch, and with 15 to 20 years kind of research experience, and that is what we do justice to. That is the numbers, and that we keep looking at. And we have a lot of no's in our portfolio. Like we don't do it, even if those stocks do well. For example, let's say PSUs in general, we have avoided. Commodities in general, something which we have avoided as sectors, and we generally are always try to find ideas in consumer discretionary or technology, and in energy transition being one of the things. And we always have preferred premiumization as something which in the consumer segment, wherein we should be getting to a company which would be able to move customers from lower price product to higher price. For example, let us say Warren Beverage kind of a company which creates some noise about Sting, which is the energy drink, not just the carbonated beverage. And similarly, let us say companies like, let us say, Interglobe, it is going for long distance international travel. Now it is going from entry level to business classes. So wherever there is premiumization opportunity in consumer discretionary and low penetration, we are very excited about that space. In technology, be it pharma research like CDMO, or be it related to electronic manufacturing, or something related to AI, or those kind of things. That is where we always are very interested, because that is where we think the good big growth will come. And the energy transition is something which is the reason why India is being able to stay away from Middle East crisis or such things. And also we feel that affordable energy is becoming more and more affordable because of things like ethanol, things like solar, things like wind. And we feel that energy consumption is something which will become big thing. And as you can see, that all these stocks and everything that we are talking about, mostly they will not be that much influenced by tariff, or influenced by things like what RBI is doing or what finance ministry is doing. We try to be much more bottom up, though the stocks get affected because of overall market. But because of this ability to deliver good growth, we end up doing pretty okay. And for instance, this last 9 months of this financial year, overall top 500 stocks earnings growth has been just about something like 4-5%. But our portfolio has delivered more than 25% earnings growth. So we in this correction, what we have done is that we have done some rejig to our portfolio. We have cut some of the tails in terms of small caps and some of the expensive stocks. And overall, today, our valuation of our portfolio looks pretty compelling and with a PEG ratio of somewhere around 1.1, and FY26 price to earnings of somewhere around 28 times, which used to be much higher. And considering that all these are zero debt, almost zero debt, negligible debt company with 15-20% kind of minimum return on equity and good growth, we think that this valuation is pretty reasonable. So this is how I would like to summarize, and probably I'll leave it to you to ask some questions, and then probably I'll take it forward from there.
थैंक यू सर, आपने बहुत अच्छे से बताया मार्केट के बारे में एज वेल एज एम्परसेंड के बारे में. Investor, you have some questions, so please feel free to ask from sir. Otherwise, मैं क्वेश्चन पुश करती हूँ सर से on behalf of my investors. So मैं 2-3 मिनट वेट करती हूँ सर इन्वेस्टर्स के लिए, फिर मैं कुछ क्वेश्चन उनसे जो आते हैं फिर मैं आपसे. सो सर, एक इन्वेस्टर ने पूछा है कि इस फंड को एम्परसेंड को हमारे 7.5 years हो गए हैं, करेक्ट?
यस.
ओके. और ओवरऑल सर हम अगर रिटर्न देखते हैं, CAGR रिटर्न तो कितना दिखा रहा है सर हमारा 7-7.5 साल में?
So वही मैंने बताया, it's about 20.5% or something, but you have to understand that this is an AIF. So all the taxes, whatever profit that we book, we pay all the taxes. So it is net of those taxes and net of the fees.
After net of the taxes and net of the fees is 20.5%.
Yes.
It's quite good even. I mean to say, after taxes, after the fees, it's 20%, more than 20%. It's really quite a very good number. And some third course is some multi-cap.
Multi-cap. So multi-cap है आज के दिन में, जैसे मैं बताऊं कि almost about 40% large cap होंगे and 30% है mid cap and 25% small cap and about 5% cash है. और जैसे कि मैंने बताया that even within the small caps, less than 10,000 crore market cap is about something like 5%. So mostly, 90-95% of of our equity are more than 10,000 crore market cap.
Okay, great. और सर इस हाँ हमारे एम्परसेंड में हम अनलिस्टेड या थ्रू क्यूआईबी या प्री आईपीओ स्टॉक्स में इन्वेस्टमेंट नहीं करते हैं या आप लोग प्लान कर रहे हो सर?
Yes, QIP we have invested. Even we participate in IPO because as an AIF we are qualified institutional investor.
Yes.
But what we don't do is unlisted, and that's something which it's not as if like we are not allowed to, and we if you want we can do that. But that's something which. One of our key investment philosophy is that we should invest in companies having a track record, and we should be familiar with the management. Because of things that we have done in our life, we have not really got the chance to be familiar with some of these companies in the unlisted space. Just knowing one presentation is not enough, right? You should have interacted with them over a period of time, multiple years. So that's why we have not done it so far. I'm not saying that we will not do it going forward because it is, our fund is not going to be driven entirely by me. We also have a research team. So we are adding people who also are experienced in this. So in the future we may do it, but if whatever we will do, it will be very, very deliberate and with a lot of detailed work rather than just going by, as they say, the narratives that, okay, this looks good or that looks good.
आपकी पॉइंट ऑफ व्यू से नेक्स्ट 5 to 10 इयर्स में मार्केट में कौन सा सेक्टर आई मिड लार्ज कैप, मिड कैप या स्मॉल कैप, कौन सा बेस्ट मार्केट कैप रहेगा और किस सेक्टर में हमें अवॉइड करना चाहिए और आप लोग किस सेक्टर को फोकस कर रहे हो? आपने मेंशन ऑलरेडी कर दिया है बट स्टिल स्मॉल जस्ट में अगर आप बता सकते हो कि इन्वेस्टर्स को कि हाँ आप इस सेक्टर में इन्वेस्ट कर सकते हो, यहाँ से अवॉइड कर सकते हो और साथ साथ में यस आप हमारे एम्परसेंड में करने से
I can tell
मार्केट में हम नेक्स्ट जस्ट मैं एक ये नहीं बोल रही कि टोटल पर हाँ अगर हम नेक्स्ट 5 to 10 इयर्स का हमारा टेन्योर है तो कितना रिटर्न एक्सपेक्ट कर सकते हैं हम और किस सेक्टर में करना चाहिए?
जैसे मैंने बताया कि आप अगर देखेंगे टॉप डाउन देखेंगे तो अपना कंट्री जो है नॉमिनल टर्म्स में से इंक्लूडिंग इन्फ्लेशन 10-11% या 12% से ग्रो कर सकता है, राइट? क्योंकि 6.5% जीडीपी ग्रोथ और 4% इन्फ्लेशन तो हो गया. देन वी विल गेट इनटू some of the underpenetrated sector. For example, air conditioner is, let us say, underpenetrated, or let us say electric vehicle is underpenetrated, or let us say airline is underpenetrated. तो इस तरह का बहुत सारे जो सेगमेंट है जो कि अंडरपेनिट्रेटेड है, या फिर जो टेक्नोलॉजी जैसे फार्मा रिसर्च आउटसोर्सिंग है, तो उसमें इंडिया हैज सच अ लार्ज टैलेंट पूल ऑफ चीप साइंटिस्ट्स और इंजीनियर्स who can grab market share globally. So that's something which can grow really fast. So there are this space where we see good growth and we want to stay invested in it. Many a time what happens is that the valuation is not really compelling. Valuation may become too rich, so one has to position accordingly. One probably has to book profit at the right time and come in. But as a practice, what we want to highlight about us, and probably so that's something which investors can think about themselves, as well as that the company that we get into or invest into, we should be able to understand what they do. With simple language, we should be able to say that, okay, this is what that company manufactures. Let us say Warren Beverage, it makes cold drinks. A very simple one line, two line can, but what happens is that there are many a company in bull market, you come across those names, it is very difficult to know exactly what they do.
Yes.
Okay, so the simplest thing to do is that to avoid such names. The other thing that we do is that we want to find out that who really the company is working for. See, for example, a lot of these PSUs, they might be working for the MLA, MP, or their employees the very last thing, maybe like they're working in the security of nation, but not necessarily in wealth creation, which is why something which is avoided. Then what we avoid is that these commodities where you have to follow what China is doing, what the USA is doing, or so there are a lot of regulation. What is going? There are too many variables, so it is very difficult to control all those variables. So you may like to avoid that. See, if you look at it, every company will go and see competition. Every company will face some kind of a regulatory risk because government will do something to them. But it is better to go for some such company whose fortunes are driven by the way they manage it than, let's say, external environment like what China does or what, let's say, Pakistan does, or I mean, USA does, all those things. And the owners' interest should be aligned to minority share. That means if the stock price goes up, if the company does a lot of profit, then it's because there are a lot of companies, as you can see, that what their main business model is to talk up, say a lot of good stories and raise a lot of money from the market, and that is what they keep doing. So that's something which one should generally avoid. When you are getting into a company which you can describe in a very simple sentences, couple of sentences, then it becomes very easy to track. And that is, let's say you are going to the shopping mall or you are going somewhere else, you see their product, you see their price, you see their competitor's product, and you can experience it as a consumer or as an employee or some kind of associate, and that is how you get conviction. Because what happens is that our market will continue to stay volatile. Whenever you are getting into something which is relatively unknown to you, and the market becomes volatile, that is the time when you have to show conviction and stay invested in it. What happens is that if you are not in a company in which you are truly believing in, and market pulls back like this 10-15% or something like that, then you will sell it out and then not participate in the recovery, or then again if you want to invest, then you will invest it at a much higher level. So that really becomes the problem, which is why it is very important that you should have conviction in those names that you are investing in. And it is only when you have some knowledge about their product, their managers, and their utility, their benefits, then only you can have conviction.
Thank you, sir. सर और भी कुछ इन्वेस्टर्स के से भी बहुत से इन्वेस्टर्स की क्वेश्चन आते हैं कि अगर हम दूसरे एशियन कंट्रीज को देखते हैं तो उनकी पी 11-12 पे है, हमारी पी 20 पे चल रही है, तो क्या इंडियन मार्केट एक्सपेंसिव है, हमें इससे दूर रहना चाहिए, या इंडियन मार्केट ठीक है? तो आपका क्या व्यू है सर?
देखिए, इस सबसे बड़ा चीज जो आपको इसमें वैल्यूएशन का, बहुत वैल्यूएशन इज अ वेरी ट्रिकी सब्जेक्ट. ट्रिकी सब्जेक्ट इसीलिए क्योंकि देयर आर, बिकॉज़ फर्स्ट ऑफ ऑल price itself is something which is there, everybody can see. Similarly, that valuation of price to earnings is something everybody can see. But at the same time, there could be thousands of reasons why it is what it is. Because let us accept that market is wise, and a lot of people have come together and have decided this to be the price over a long period of time. So India का जो valuation premium है वो आज नहीं है, वो हमेशा से है. तो पहले तो वो समझना पड़ेगा कि क्यों है. क्योंकि आप देखेंगे जैसे कि इंडिया का जीडीपी जो है 6.5% ग्रो कर रहा है. एशिया में जैसे थाईलैंड से लेके कोई भी कंट्री ले लो, 2-2.5% 1.5% से कोई ज्यादा ग्रो नहीं कर रहा है. ठीक है, द ओनली कंट्री व्हिच इज ग्रोइंग लिटिल फास्टर इज चाइना, व्हिच इज लाइक स्टिल एट 4.5-5%. And but then it's a different type of company where the industrial profit is very low because of excess capacity, etc. So ये बात आपको ध्यान देना पड़ेगा कि इंडिया का ग्रोथ इज बेटर. द सेकंड थिंग जो हमेशा इंडिया के फेवर में रहा है, of course there will always be excellent companies everywhere. See, for example, there is a company, like the overall PE we keep looking at, but that is like missing the true picture. For example, in this Korea, let us say it is trading at 13 PE and India is trading at 20 PE. But that 13p is not telling you the story that the bank is trading at 6p, but a Samsung CDMO business is trading at 40p, which is more expensive than some of the equivalent company in India. So, so it is not as if like there are no expensive stock there. For example, Alibaba is trading today at 25p. It is whereas China overall is trading at 8p or 10p. So yes, to go by the story that okay, the overall this country is at this p, that p is not the relevant thing. Overall, as a country, we will always be more expensive. That is because as an overall country, we are growing faster. Now, talking about specific companies, specific sectors, then it will only make sense. For example, let us say a Mahindra in India is growing at 20%, but Hyundai in Korea is growing at 2%. Or the thing is that because of our India structure, Mahindra kind of companies will not face the disruption risk of, let's say, EV as much as Korea. So, and very last thing that you will see is that more often than not, in similar sectors, even though Indian companies don't have supremacy in terms of technology, but invariably they will be better, they will be enjoying better return on capital employed, they will be having a better balance sheet, they will be, and not just once or twice, but over a very long period of time. And that's something which is which you have to give credit to the way Indian managers manage the businesses. See, for instance, Maruti, their ROC, return on equity, etc., is more than 20-25%. Suzuki, over last 20 years, their average return on equity probably is not more than 4-5%. So these are facts which are in favor of India. Similarly, if you look at many of these IT companies, and everywhere you will see that the better balance sheet quality will be there. Then better communication to investors should be there. We are not talking about some odd companies which go get into trouble. Like say, for example, we have seen IndusInd getting into trouble, or many other companies. India also has its bad apples. It's not that India doesn't have bad apples, but more often than not, you will see great management. Even, for example, HDFC Bank, over a long period of time, it has created huge wealth. It is not as if like it has invested the best amount in technology. Technology investment would have happened at a much bigger level by some foreign banks. But the way it has managed, and over a very long period of time, you will rarely see such companies outside of India. So while we are talking about many things, we also have to get into details as to why that valuation is. We are not talking about 1 day, 2 day valuation. We are not talking about, let us say, what has happened in 6 months. But India valuation premium over last 10 year, 20 year, and we have to go and justify that first. Like, what really is the thing that stands out for India?
सर हम ये कह सकते हैं कि आपके पॉइंट ऑफ व्यू से इंडिया स्टिल अट्रैक्टिव मार्केट है एवरी इन्वेस्टर को इन्वेस्ट करने के लिए, अभी राइट टाइम है इन्वेस्ट करने के लिए? अगर लेट्स अज्यूम कि
as I said that risk reward तो फेवरेबल है ही, क्योंकि करेक्शन तो हो गया.
यस सर.
आप हो सकता है कि नेक्स्ट 6 महीने में शायद इमीडिएटली रिटर्न ना मिले, हो सकता है कि नेक्स्ट 1 ईयर में भी ना मिले, बट ये लेवल से, क्योंकि ये ऑलरेडी जितना गिरना था, जितना नेगेटिव न्यूज अब देना था, सब कर दिए हैं. एंड government is taking steps to revive the economy. RBI is taking steps to revive the economy growth, particularly, and so that is why we are at a relatively better position. It is not as if like that it cannot go down further, but at least we should be like in the equity market, which is a volatile market. We should always think in terms of probability. That is and we should always think of various scenarios. And if you put all those things into account, then you will feel that okay, this is much better, because let us say from sitting here at $3,030 gold price, or let's say considering that RBI is wanting to cut interest rate, and the tax rate being 35% on fixed income, and real estate having done well for last couple of years, and equity. If you look at all the asset classes also, okay, so because equity has underperformed so much, every asset class in last 1 year,
Yes.
then even from that point of view also, then the time to have invested in gold, maybe like you will still, it may do well, but to expect that it will do really much better from here is very difficult.
Answer my last and but not the least the question. कि why people should invest in the Ampersand AIF Cat 3 and why in equity market, Indian equity market. सर आपने बहुत कुछ बता दिया. I mean to say हमारे investors को as well as जो भी हमारे वेबिनार को देख रहे हैं या बाद में देखेंगे हमारे YouTube चैनल, उन्हें बहुत इंफॉर्मेशन मिलेगी. और ये लास्ट क्वेश्चन जो था कि हमें क्यों एम्परसेंड के एआईएफ में इन्वेस्टमेंट करना चाहिए और इक्विटी मार्केट में, इंडियन इक्विटी मार्केट में. यस सर, ओवर टू यू.
See, देखिए, Ampersand AIF, first of all, the key thing is that there are very few AIF who are as old as we are, like 7.5 years, and have established a track record over such a long period of time, and it is an open-ended fund. And so that's something which stands out, and we have our performance is there for everybody to see, and we have not delivered this performance in just one type of category like small cap or large cap. We have managed to be there in almost everything, and so that really is something that tells you that we are our knowledge of 20-30 years in this industry has prepared us to deal with all possible market conditions and all type of opportunities. And that's something which is stands out for us. The other thing that stands out for us is that, like, our team here is mainly from Bank of America, Merrill Lynch, and before that other FIIs. So to that extent, we were exposed to best of the research practices way before it became vogue among domestic houses. And so we got the global perspective of dealing with foreign investors much more than anybody else. So that's something which we have practiced thoroughly out here. And so these are the good things about us. And the reason why multi-cap is a really good way to invest is that, as you know, like if the liquidity conditions become not so good or the global risk environment is not that conducive, then small companies don't generally struggle, and large companies do well. So a flexi-cap or a multi-cap fund like us can take advantage of situation which is favorable to large caps or situation which is favorable to small caps. We may struggle in between once in a while, because it takes time to completely change the character of the portfolio. But we have always managed to do that, and we have seen all these cycles. For example, 2018, 2017, 2019, small caps are not doing well at all. In those periods also, we are doing better. Then came a period when small caps were only doing well, where large caps were not doing well. So we managed to do well in that circumstance also. So for an investor who are staying invested for a long period of time, and this flexibility is something which is inbuilt into our product, is a great thing. As far as equity is concerned, as you said, that after this correction and with the proactive steps being taken by our government and our RBI, that's something which will be helpful. But apart from that, there are several opportunities which are panning out at this point of time. For example, growth opportunities in e-commerce side, growth opportunities in electronic manufacturing side, growth opportunities in contract research and AI side. There's so many things which are going on. And at the same time, overall macro stability is there in the country, in the sense that the bank non-bank bad assets are very low. Then our forex position is pretty comfortable. So we are not really, and oil which always used to give us shock. That also is not really a problem. So macro is stable, even it is not great or extremely vibrant, and people can keep complaining about something or other, but it's fairly there. And now one more thing which we have to also understand here is that if you look at last 7-8 years, India has been building huge amount of infrastructure. And most of those infrastructure are getting commercialized now, be it dedicated freight corridor, be it New Bombay Airport or some massive infrastructure are coming into stream now. So those things will give a leg up in terms of basically infrastructure construction is what we have been thinking about. But what about the benefits of that once you built it? And we will be entering that phase. So all those factors are there. So let us not get too bogged down by the wars who are too far from us. Nothing is happening around us, and we are not fighting with anybody. Our government, thankfully, is not really having a confrontationalist approach to anybody. So that way, that's the advantage of that will kind of pan out as we get into next year.
Thank you very much. It was really very insightful and informative webinar, and thank you very much. And I'm from AIF and PMS Expert India. हम हमेशा वेबिनार अरेंज करते हैं अच्छे फंड मैनेजर के साथ. तो आपको जो भी क्वेरी है या मार्केट के साथ मार्केट की इंफॉर्मेशन जानना है, प्लीज हमारे चैनल को सब्सक्राइब कीजिए, AIF PMS Expert India. एंड कुछ भी क्वेरी है हमसे पूछ सकते हैं, या संजय सर ही from Ampersand fund manager. So please feel free to ask. And thank you very much, sir. Thanks for coming.
Thank you for the opportunity.
Thank you very much.